Hey, how's it going, everybody? It's been a while. It's been too long. It's been a month since I made a video. Life just threw a whole bunch of different things my way, and I'm finally kind of getting little things back on track. So here we are. So what stayed on track, of course, was putting $150 into my tax-free savings account using Wealthsimple Trade, the best platform out there because it's zero commission. So I've been doing that. So let's get updated on what I've been doing last month. Let's start the video. Hey, my name's Steve Coleman. As I said, I am a dividend stock investor putting $150 every week into my tax-free savings account to earn some investment income that I can take advantage of in the future for major investments in the home or just kind of fun money. Who doesn't want to have a little extra fun? We all need extra fun these days. So what have I done in the last month or so? Well, in the month of March, I earned $108 in dividends. It was supposed to be a little bit more than $108, but of course then there were some companies that had slashed their dividends, and AQN and Course Entertainment were two of those companies that have slashed their dividends. So I'm starting to see the impact of that in my monthly numbers. So that's why March was slightly lower than December. So normally it keeps going up, but in this case, it went down. Same thing I'm seeing a little bit in April, where again, one of the companies that slashed their dividends didn't get as much there, but April is gonna probably end again high. Currently, I'm at $132 of dividends received in April. 2 more payments coming, Bank of Nova Scotia and Diversified Royalty Corp. Those are both actually ones this week and the ones the following week. So I'll give you an update on that to give you the grand total of April and see how things ended up there. So that's the dividends that I've received. Again, they keep getting higher and higher and higher. You know, right now on average, I'm getting $116 of dividends a month. That's awesome. This is money that we reinvest right away into more positions to kind of keep that snowball effect going. And so that's on track. The plan has not changed there. So let's take a look at my portfolio and just see where things are at overall. So currently I'm up to $26,357. I finally, in the last month, surpassed the $25,000 goal. So it just seemed like it was hit and miss there. Things were just going very, very sideways for the longest time. Up and down, up and down, up and down. But finally, there seems to be more of a trajectory going up. You know, you can see that here on the 1 month view, up 4% for the 1 month. When we go to 3 months, well, you can really see where that 1 month difference, where we're starting to see some growth happen again. Is it across the board everywhere? Absolutely not. But is it happening? Yeah, we're starting to see some growth. Interesting thing is, like when you look at the 1 year, we're still seeing, because it was a year ago that everything dropped. You know, it was the end of April, mid-April. It was actually right after I sold my car and put a lot of money into an ETF that all of a sudden things really dropped. So that was not fun. But we're at basically the 1 year mark. So anybody who started investing a year ago when things were really down, I'd be really curious to hear what you have to say about your portfolios, because you're probably doing a lot better of a realized gains perspective than a lot of us who've been, say, at this for 2 or longer since the whole pandemic started. So yeah, I'm at -3% for the 1 year mark. And yeah, overall, my tax-free savings account, -2.9. So we're, you know, just close to kind of getting back completely in the green. Is it going to be every position? Absolutely not. But you know, it'd be nice to kind of be breaking even again. So where have I been putting my money in the last month or so? Well, I have been getting back into the habit of putting money into VDY. So that is Vanguard's High Interest Canadian Dividend Yield ETF. And I bought 6 positions of that. What my plan was for this year was to start putting money into that almost like exclusively, and then putting money, anything that's left over, you know, let's say pocket change, into other positions to try and keep that as diversified as possible. I have deferred from that plan a bit when I have been putting money into other companies like Interject Renewables. So I picked up 5 shares of Interject. Let's take a look at Interject here. So for the 1 year, they're down negative 23%. My total returns, I'm down negative 19%. So this is a position where I'm trying to, again, average down my cost. That is a key cornerstone part of my portfolio plan. I want to average down my cost as much as possible, to then when things start to recover, I see those returns. If you watched any of my other videos, Aecon is my new classic story where this strategy has worked. If I jump over to Aecon, they are, there you can see I bought them all the way going down over like that. So this is the 1 year view. For most of that year, I just bought them as they kept going down. As you can see, they started going up, and now, I'm up 4% overall in that company. So I'm hoping that this strategy just works with these other positions. One of those positions that I really hope this strategy is working for is with Chorus Entertainment, which you've heard me talk about this company as well. So here you can see they're down for the 1 year, negative 67%. So I have been buying them as they have been going down this whole time. Again, that's what averaging down your cost is all about. You don't just average up your costs when the stock's doing well. You gotta buy it when it's doing bad. So I have picked up in the last month 120 shares of Chorus Entertainment. I've gotten my average buying price. One point it was $6. Now it's down to $3.18. So what my plan is right now is maybe every other week to actually buy 100 shares of Chorus Entertainment until I get it up to say 1,000 shares, or once I surpassed, which don't think will take that long, once I've surpassed $100 worth of dividends a year with Chorus. So that's kind of one of these little things I'm doing, is just I want to see all my companies be paying me $100 or more in dividends for the year. And while I'm diversifying everything, but that's becoming one of the little factors that I'm just using to kind of make a decision on. But yeah, right now I've got 800 shares of Chorus. Once I get up to 200, I'm for sure past that $100 for the year mark. Heck, if I get it up to 120, whatever it ends up being, is all great. Like their dividend yield right now, right? I don't think Wealthsimple's updated their thing. I think this is saying 14%, but I think it's actually 8% because they did cut their dividend in half. But the dividend yield is still very, very high. I don't believe they're going to cut their dividend again. I think that would really be a betrayal of a lot of investors in them. But right now, while the economy is slowing down, are we in a recession? Are we not in a recession? Advertising dollars kind of do dry up in that period. So therefore does Chorus's revenue. But anyways, I'm going to keep on buying them when they're down. And the hope is that they will recover eventually once we come out of this economic slowdown. So whatever you want to call it, whatever this actually is. The other company that I kind of picked up that I haven't bought for almost 6 months was Ryokan. So Ryokan, this is one, if I look at the 5-year view, started really investing in them right from the beginning because they dropped off the cliff with COVID, and then just kind of bought them going up. But then I just kind of let things status quo because they were doing very, very well. Like I think I am up 3.7% with them, $55, not much. They are a monthly paying REIT, real estate investment trust. So finally, it's nice to kind of see that dollar amount increase. I think it was like $5.50 for the longest time. So now it's nice to see it up to $6 a month going forward. So I will continue to kind of put money into Ryokan because right now they make up 5.85% of my overall portfolio, which that is going to be kind of roughly around the average. I think 6% is kind of what I'm going to aim for. But of course, as I grow that VDY, slice of the pie, I'll put a chart here to kind of show you, that's going to squeeze the other percentages a lot lower. So we'll see how that all plays out. So that's really all I had to say for this video. Really want to try and just do a quick update, let you know where things were at, explain briefly my disappearance. I'm here, I'm back, trying to make videos, once definitely a week, sometimes two. Really depends on if I have life under control. And there's no guarantees there either. Stock market, life, no guarantees. But as long as we're having fun, as long as we have a plan, which I got my portfolio plan, and I'm sure you do too. Share in the comments kind of what your strategy is going forward this spring, summer. And if you haven't already subscribed, hit that subscribe, like the video. It helps out the channel a lot, helps me find new viewers. And yeah, we'll see you in the next one. So keep it in the green. We'll talk to you later and take care. Bye.